Friends, welcome back to the channel. Today we will talk about my investment strategy. Where do I invest? I'm going to show you my investment allocations to different asset classes as well, and we will talk about each of them in detail as well. Right. So before we start, I have a very sweet offer for you. I am sharing my American Express referral links. Why don't you sign up and get two cards using my referral links, and I will get on a call with you and talk to you about personal finance for 30 minutes. I hope it's a sweet deal for you. Once you have got the cards, just email it to me on the email address that I'm sharing below, and we will get on a call. So let us begin and talk about the investments that I have. Firstly, I'll tell you what is my current asset allocation. When I say my current allocation, I mean my family's current asset allocation, right? So we have around 64% in equity, we have around 10% in debt, mutual funds mostly, we have around 5% that is held in cash, around 9% that is in 54 EC bonds, and around 4% in PPF and EPF, and 8% in lots of other places. Say it could be gold, it could be some LIC policies that have been held for a long time, not making any additional payments there. Some it could be some advances given to some people and sort of things like that. So this is the broadly the asset allocation that we have. The 54 EC money that's going to come in next year, I'm going to talk about what I'm going to do with that as well in the end of the video. So stay tuned and watch the video till the end. Let us first begin and understand where I primarily invest in equity, right? So out of the 64% that is allocated to equity, out of that 90% is held mostly in equity mutual funds. It's a mix of mutual funds of flexi cap, tax saver funds, and some mid cap funds and small cap funds. I'm not going to take the name of these funds, right? But this is the strategy where I follow a portfolio of use a portfolio of mutual funds in investing in equity. The balance 10% is held in a portfolio of stocks, just to scratch my itch of buying stocks. I have been of this opinion that if you have if you want to buy stocks, you do it with a small portion of your money, because generally most people don't make money buying stocks directly, right? Equity mutual funds are the way to go when you invest in equity. 10%, that's why I have very little allocation to direct stocks at all. Next, moving on to debt mutual funds, right? So in the debt mutual fund category, I have a mix of funds, right? I have some balanced advantage funds, I have some conservative hybrid funds, I have some liquid funds, right? So I am using this mix. Basically, this is the emergency fund for the family, right? So we use this mix primarily to ensure that the money grows over and above inflation, and gives us say 1 to 2% extra, right? Because there are three people earning in the family, right? So we don't really need to set aside a big amount of cash that has to be a part of the emergency fund. So that's why we've invested the money in this way, so that even in case an emergency comes, because I don't know when the emergency is going to come. Emergency could come 10, 20, 30 years later also, or it may never come at all, right? So why should your money rot in an emergency fund like a liquid fund or a fixed deposit? Because liquid funds don't give you more returns anyways, and a fixed deposit after taxes is the most inefficient product you could buy, right? So that's why we put it in these funds. Taxation gets deferred indefinitely, they grow over and above inflation, and also provide the cushion of ensuring that there is cash. So apart from that, we also have a decent allocation that is held in cash in bank accounts. So that's why we don't have a proper emergency fund as such, but we have made sure that we have adequate amount of insurance policies in the family. We have term insurance, we have car insurance, we have health insurance, which is more than normal for each person in the family, right? So we have ensured that the insurance is up to date and adequate, so that we never have to dip into these funds at all, even if an emergency were to come. So moving on, next is the public provident fund and employees provident fund. So this allocation has come down because of simple reason that my wife and I both don't have jobs as of today, so EPF contribution does not go at all. What we do is just public provident fund contributions annually. That's why this percentage seems lower today. If we were to have our jobs as of today, this would have still been higher. But this is one of the best asset classes and my most favorite place to put in money, because of a simple reason that whatever income you earn from these is tax free firstly, and then it is more than the inflation rate. PPF earns you around 7.1%, EPF earns you around 8.1% as of today, and if you have a daughter, you should open a Sukanya Samriddhi account for her as well, which earns you around 7.6%. All of this is tax free, okay, firstly, and then all of this is backed by the government of India, so it is the most safest place where you could put your money. That's why I love this instrument. If you are an employee, you should also figure out and try to max out your EPF contributions, wherein it is capped to the employee's contribution is capped to 2.5 lakh rupees per annum, because over and above 2.5 lakh rupees, what happens is it gets the interest earned on the amount invested over and above 2.5 lakhs gets taxable, right? That's why you shouldn't be contributing more than that. Next is the 54 EC bonds. 54 EC bonds were primarily bought after we sold a property. This was done by my mother, so these are going to mature next year, and largely what we are going to do is put it in a mix of equity and debt funds, right? Next is the cash holdings. This is the real emergency fund for us, right? This is the money that we earn on a monthly basis, gets parked in the bank account as cash, and also some extra cash that I keep in the bank account for meeting any expenses that are not planned, right? Because there could be a car breakdown, or there could be a medical emergency. There are lots of things that are not planned for. Maybe you want to travel on an immediate basis, and flights are so expensive today, so you need some expenses that are over and above the monthly budget that you have. Okay, then the others bucket is largely some fixed deposits, some investments in gold, some money given to family members, some investments in NPS, right? So let us talk about NPS. NPS gives you two benefits, right? One, you can contribute 50,000 per annum yourself, and you can get that additional tax benefit. And then a lot of people don't know is that NPS also, you can contribute from your employer also. So you can ask your employer to start contributing to NPS. So there is a provision in the Income Tax Act wherein if the employer contributes up to 10% of your basic salary, you can get that as a tax deduction, right? So this is a hidden benefit of no, I won't say hidden, but this is an unknown benefit of NPS that most people don't know. So you should definitely start looking at this seriously, start taking NPS seriously, right? So if you are employed, then you should definitely start focusing on saving taxes here. So now you may be thinking, I don't have lots of other asset classes in my portfolio. Take for example, crypto, right? I only invested 5,000 rupees once, and I've forgotten about it. I've written that off because I am sure it must be around say 1,500 rupees as of today's valuations, and I've not even bothered looking at the logging into the brokerage account and looking at the value of that asset class, primarily because firstly it's not really regulated by the Indian government, so it's not really recognized as an asset class. And also secondly, there are lots of unknowns here, so I can't really put in a lot of money so that comfortably and I can sleep well, so I don't do it. That's why. Then there is private equity kind of things, right? I have access to the private equity market. I have lots of friends who invest in the private equity markets, but I have still not taken the plunge yet for a couple of reasons. First reason is that we just started our own businesses, right? It's been just 2 years, so firstly you need to streamline that business and ensure that business is paying out well every month, so we are not dependent on our corpus to live our spend our money. And also once the money is invested in startups, right, it's logged in for 10, 15, 20 years, because the success rate of startup doing well is very low, right? So I have to make a set of say 20, 30 investments, and even if I'm investing 2 to 3 lakh rupees in each, I need to have a capital of say 40 to 60 lakh rupees. That's what I don't have as of today, so I'm not even going there. I advise most people to don't do it, because you may expect returns, but ideally you shouldn't be expecting returns from these investments. It's either 1000x for you or nothing, right? So if you're willing to take that kind of risk, please go ahead, but I am not someone who wants to do that. I may do it in the future, provided I have that kind of capital, but ideally you shouldn't be doing it. So the largely, what my focus, what my expectation from this portfolio is that it generates 10 to 12% kind of compounded returns. Compounded and weighted, average returns of the entire portfolio should be 10 to 12%. I would be very happy if I continue to get that kind of returns over the long term, because expecting more than that is, putting yourself up for disappointments, right? So that's what I don't want in my portfolio. I just want a consistent growth of 10%. My focus is completely on my own business and building my income sources, right? So that's what your focus should also be. If you are employed, try to focus on your own job, start upskilling yourself and start increasing your income there. That will give you more returns in the form of your higher income, higher salary, and that will give you the more investable surplus and investable capital to invest in your and create a corpus for you. Because without a capital, you can't really expect to have a corpus or have